100 सालों से ऐसी हर अच्छी शुरुआत का साथ दे रहे हैं हम और हमारी न्यू एज बैंकिंग सर्विसेज यूनियन बैंक ऑफ इंडिया।
Welcome back. You're watching IndianOpen right here on BloombergQuint Live. A quick glance across Asia and what that side of the market has been doing. Following US, Asia too is trading positive. So you've got more than 0.5% gains coming in for the Japanese market. China is trading higher by closer to 0.5%, and similar is the case with Hong Kong. So above 0.5% across the board. For the SGX Nifty though, this is a marginal dip that's coming in. About 0.25% or so, but not changed too much since we've been tracking it. But nonetheless, yesterday's pullback once again reinstilled some amount of confidence, and the actual cover-up that Bank Nifty did, the almost 1.7% scale up that it did from the lows of the day, that seems to be encouraging.
Yeah, I mean, banks were near support levels. We've been talking about it, and the global news flow turned positive while we were on trading yesterday, and which is why we closed with gains. So maybe the other markets are doing a bit of a catch up, but well, banks and Reliance could well be the key ones to monitor in the session today as well.
Yeah, I don't know whether you'll have a big bang move ahead of the policy, and just to wait it out and watch, because
yeah, you're right.
It's not a really clear direction that one is getting with regards to how much the quantum of the cut could be this time around. While
a cut is a consensus, but the quantum is not.
Yes,
yeah.
So we'll have to probably see how that takes shape as we open up a trade this morning. But also important to keep an eye out on what happens in the derivative space. Namni is joining us to give us an update on that. Namni, good morning.
Good morning to both of you. Well, the markets will take cues from the monetary policy, but last hour buying yesterday, we recovered majority of the losses that were seen in the last 3 days for both Nifty and Bank Nifty. So for Nifty futures, a clear sign of short covering, because intraday there were some positions being built. We did see the open interest going up, but towards the end it was down just about flattish. Premium was maintained at levels of 46. For Bank Nifty as well, there was a huge bounce that was seen intraday, and premium also surged to levels of 100, and there were a long position seen for Bank Nifty futures as the open interest went up by 5%, and a very comforting sign for the bulls coming in, because the VIX also, as we recovered in the last hour, India volatility index fell sub levels of 14, so 13.3 is where it closed, 8.5% lower for India volatility index. PCR as well inched higher, so 1.44 versus 1.3 the previous session, giving you signs that there was more put writing which came into the system. And remember, all this happened just in last hour of trade, because when we started the day till 2 or 2:30, there was more of call writing which was witnessed. So if you look at the distribution for today's weekly expiry as well, maximum open interest is at the 12,100 strike, while on the put side, huge writing yesterday came in for 11,900 and the 12,000 strike, and called writers ran for cover. We also breached the 20 DMA twice, but we managed to recover and defend that mark, 20 DMA as well as the 12,000 mark. As you can see, 12,100 and the 12,000 strike saw unwinding in trade. In terms of stock futures, then a lot of stocks were active, and Ujjivan Financial was up and about. Of course, the response that its small finance bank got, 170 times subscribe, I think that led the stock higher. Not only Ujjivan, following the move was Equitas too, so fresh long positions were seen there as well. Mindtree, where commentary was positive from the analyst meet, this one saw short covering in trade. And L&T, after falling 10% in the month of November, weakness continues, and in the last 3 to 4 days, we've been seeing fresh shorting continuing on the future side as well. FI data continues to sell in cash, even the index futures, they continue to add short positions. 6,000 contracts were added, and now they've become net short on index futures vis-a-vis being net long when we started the series. But on the index option side, considering this is also the expiry day, we did see more of positive stance coming by. They added more of call longs and also put short, while some unwinding was seen on the put long side. With that, it's back to you guys.
All right, Namni, thanks very much for that. Parthiv Shah, Director at TRACOM Stockbrokers, he's joining us this morning. Parthiv, wish you a very good morning. Let's talk about Bharti Airtel first off. I mean, while the stock has been making highs after highs, brokerages are extremely positive now post the announcement of fundraising. 520, 530, those are the kind of target prices Bharti Airtel is being pegged at. Do you feel that they'll be able to turn around the way that they have been aiming to at this point?
Good morning, Devina. Thank you for having me on the show. Yes, I think whenever we've been talking about the telecom sector, we've always been highlighting that out of all the 3 major telecom players in the private sector space, Bharti Airtel has been most resilient to all the challenges faced from Reliance Jio. And more importantly, I think what wisely they've done is during the very challenging times, during the times of very low ARPUs, I think they've made sure that they don't have much of customer attrition, and the subscriber base has held on quite well. And now this is going to be very, very important. The reason being that we know that all the ARPU metrics are going to change from levels of say 120, 125 to levels of somewhere around 160, 170. Despite the fact that after hearing the new tariffs from even Reliance Jio, they are still 8 to 20% cheaper. But I think now the gap has really narrowed a lot, and which really is very, very encouraging. And most importantly, I think now Bharti Airtel, after the run-up, certainly has the credibility to raise humongous amounts of funds to the tune of almost $3 billion, of which via the equity dilution of 6%, $2 billion will be raised. I think that is a very, very important sign. Unfortunately, despite at the cost of dilution of equity, they have to do that due to the massive amount of money that they have to pay to the government. And assuming if at all these companies were to win the case in terms of paying only the principal amount, then I think the net debt to EBITDA comes to around 3.4 times, which is not like an overly leveraged scenario. So I'm very firmly believing that Bharti Airtel over the longer horizon, and personally I also feel that this is not the end of the tariff increase regime. I think over the next 2 to 3 years, I won't be surprised if the ARPUs were to go up from levels of 160 to even levels of 200, which still would be one of the world's lowest ARPU markets in terms of the size that we have. And certainly this helps these companies like Bharti Airtel to take on a lot of new customers coming from in terms of attrition from Idea, Vodafone, BSNL. So I think both Reliance Jio and Bharti Airtel are going to benefit, and it will take some time, especially after the run-up that we have seen. A lot of positiveness is factored into, but over the next 2 to 3 years, Bharti Airtel will certainly do well.
Okay.
So just wondering, Devina, and I wanted to ask this to Parthiv, that between the two, and because Reliance Jio has also come out and done this hike,
But it's still cheaper post the hike.
Still cheaper, but yeah, and so comparing all the plans and the balance sheets that they have, would Bharti be a better buy from a telecom play, or would you bet on Reliance, because there are some stiff brokerage upgrades on Reliance Industries as well? I'm classifying RIL as a telco right now, Parthiv, excuse me for that, but between the two, if you had to pick one, which one would you choose?
See, I think, Neeraj, we've been very positive on Reliance since a very long time, and it's done very well. But my biggest problem is that it's very hard to ascribe a telecom valuation for Reliance Jio, part of Reliance Industries. No doubt, if Reliance Jio were to be a separately listed company, even if it were to be quoting at 10 to 20% higher valuation than Bharti Airtel, I would still go with Reliance Jio. The only reason being, from an engineering standpoint, Reliance Jio has a very fresh, new scalable network. For them to scale from a 4G network to 5G is going to be less costly as compared to for somebody like Bharti or Idea, Vodafone. So I think I would be waiting for the time when I think Reliance Jio gets segregated from Reliance Industries. And certainly I think they have already done a lot of capex. Their cost of funds are a lot lower than that of Bharti. And if at all that conglomerate needs to raise more funds to further be more aggressive, they still have the capability to do so. So I think Reliance Industries at these levels also, I feel, will go a long way, because there is a lot of valuation inscribed in terms of Reliance Retail, Reliance Jio, and also the core business, which is relatively quite stable. But I think it's very difficult to play only as a Reliance Jio play. So that is why at this juncture, for pure telecom play, Bharti Airtel fits the bill.
All right. Stay on with us, Parthiv. Lots more to talk to you about, but in the meantime, it's also important to get in a sense of which other stocks are in the news this morning and what could the possible reaction to them be as we start off trade today. Also, the focus is going to remain on InterGlobe Aviation as the capacity growth guidance has been cut. So Amit joins in for that. Nikki, let's start off with you first, though, on stocks news.
I'm going to start off with Bharti Airtel, where the company is planning to raise around 21,500 crores from a mix of both debt and equity. From debt, it's going to be raising around 7,200 crore. In terms of equity, the sum is to the extent of 14,300 crore. And with this, equity will be diluted to an extent of 6%. Proceeds of this will be used for debt refinancing as well as servicing the EGR liabilities. Apart from that, we're looking at SBI, where the bank board has given an approval to divest stake in UTI AMC. 8.25% would be divested through IPO via OFS. Bank's stake in UTI AMC will fall to almost 10% post the OFS. Other one that we're looking at is Gayatri Projects, where the company's subsidiary would be selling in 6% stake in Semcorp Energy to utilities. That's for consideration of 406 crore. Expect some positive reaction given that the market capitalization of this counter is to an extent of around 1300 odd crore. We are also expecting metal stocks to be in focus. Bloomberg has reported that there are rising hopes between US and China. Now that they're going to be able to secure a trade deal. In fact, the negotiators from US expect the phase 1 of this deal to be completed by December 15. So more or less, metal pack is expected to be in focus. Apart from that, we're also looking at banking stocks because you have the monetary policy coming in today. Bloomberg expects a 25%, the economists polled by Bloomberg expect a 25% basis point cut in repo rate. And with this, the level goes to 4.9%, which is the lowest that we have since financial crisis. Apart from that, we're looking at Sadbhav Engineering, where the promoters have released a stake to an extent of 3.5%. Now, remember that the entire promoter shareholding, the pledged shares for that matter, is to an extent of 42%. So definitely a positive development coming in on Sadbhav Engineering as well.
All right, lots of those stocks to keep an eye on, Nikki. Thanks very much. InterGlobe Aviation, not flying so high now.
Well, yes, they have cut down the capacity growth guidance for the second time in the last 45 days. Now, they came out with a presentation yesterday which said that now they are expecting their capacity to grow by nearly 22 to 23% for the financial year 2020, and as against the earlier stated guidance of 25%, which was announced during the second quarter earnings. Now, do remember that during the second quarter earnings, the company had already lowered its capacity growth guidance to 25% from 30% for financial year 2020. So, this is the second time in the last 45 days where they have lowered their capacity growth guidance. Now, along with this, the management company also said that they're expecting the capacity growth of around 15 to 20% for the fourth quarter of financial year 2020. Now, the P&L side, if you see, the company has said that despite the expected mark-to-market foreign exchange losses, the company is expected to report profits which will be similar to the last year levels in the third quarter of financial year 2020. Now, in the third quarter of FY19, the company had a profit before tax of 191 crore rupees. So, this could be an indicative amount of net profit that the company could generate in the third quarter, in the ongoing quarter. This is the third quarter of FY20. Now, along with this, the company also said that they are expecting the revenue and cost per available seat kilometer to increase by about 4 to 5% in the third quarter of FY20.
All right, Sameet, thanks very much for that. Parthiv, what are you making of this news for InterGlobe Aviation? On one hand, where you have Spice, which is breakneck speed in terms of adding more aircrafts and increasing capacity, and then you have Indigo, which actually is suggesting a downward bias.
Absolutely. I think in terms of InterGlobe Aviation, talking about the fact that their overall, I think, utilization is going to be lower. And most importantly, I think we know for the fact that we have seen a trajectory where despite the oil prices hovering lower, I think, and especially the aviation turbine fuel not really scaling up, we've seen last few quarters, these companies, even the best of the companies like InterGlobe Aviation, have had cost-related challenges. So in which case, last quarter we saw due to a lot of maintenance cost, I think they had to face an operational loss. So now I think if in the entire year, I think if they are going to have capacity constraints, that's surely not going to bode well for a very rich valuation that InterGlobe Aviation is currently deserving. So I think there is going to be some sort of de-rating due to this. And I think at one point in time, InterGlobe Aviation's story was also about a lot of its fleet getting replaced by the highly efficient Neo jets, which were supposedly 15% more efficient. And there's even been some sort of delay in that sort of replacement. So a lot of, I think, the Excel-based numbers that were penciled in for InterGlobe Aviation's future in terms of its cost metrics have gone haywire. So my sense is that if somebody is sitting on a huge profit at InterGlobe Aviation, I think not a bad idea to book your profits, allow time to settle all the dust in terms of the news that it has been facing. Not that I'm very bullish also on SpiceJet. No doubt, I think SpiceJet has been relatively doing reasonably well in terms of garnering more market share. But again, I think it's going to be a little challenging in terms of the passenger growth, also not really being up to levels of 22-25% that we've seen in the past. So I think there's certainly some sort of slowdown in the aviation sector, and it's better to wait on the sidelines till the dust gets cleared.
Okay. Wait on the sidelines. Just before we get into some trading opinion as well, Parthiv, just one quick follow-up on the two movers in trade yesterday from the auto space, Tata Motors as well as Motherson Sumi, and seemingly The slight easing of stress on the global trade front led to this up move, but this month they haven't done all that badly from the lows. So what do you do here?
See, because I think more importantly, no doubt the trade news always, I think, creates some sort of reaction on both of these stocks. But I think there is certainly a sense of the luxury car market globally. It's not only about Jaguar Land Rover, but all the other brands. I think there is a hope that, the worst in terms of the luxury car market, in terms of the demand, in terms of the volume growth, I think is in place. So now I think what we are seeing is that the data from China in terms of the overall luxury car market is showing an improving trajectory, even from that of US and Europe. And I think a lot of these luxury car makers have a huge pipeline of new launches, and some of them are very, very innovative launches. So I think one is expecting that the volume growth in terms of the luxury spend will revive, which certainly bodes well for a company like Motherson Sumi. Still very, very early days. I think one will have to monitor a couple of quarters and the con call commentary, because they have built in humongous capacity, and now if that capacity is relatively underutilized, that's a challenge for a player like Motherson Sumi. But I think certainly for Tata Motors, I think it's enlightening to see that JLR data is coming in quite normal. I would still not say it's like a V-shaped sort of a recovery, but if I think this trend continues going ahead, and what they posted last quarter in terms of huge improvement in terms of margins from JLR, I'll still not be worried about the slack in the domestic business. But a couple of quarters of good numbers from JLR, I think certainly the stock is highly undervalued, and we might see it going a lot higher.
Okay. Let's also bring in Manoj, Vayalar, Vice President of Derivatives at Religare Securities, joining us right now on the show. Manoj, good morning to you. Today is the weekly options expiry. Nonetheless, how has the setup been as we stepped into the December series?
Good morning. Now, ideally, I guess this is going on since last almost 3 odd months. If you see, the open interest or the net position with which we start a new contract is quite feeble, especially on Nifty futures. I guess we started with almost 1.4 crores. More or less, that is what we started the November series as well. And if you see, almost the 3 weeks of November was lackluster, and the weekly options seller guys were making good money. And eventually, even in the October series, the last 8 to 9 days is where, the index inches up, and then we see the rollover happening. So this is not really a good sign, because the breadth is not positive in the market if you really see that. And there are a couple of stocks here and there wherein the large cap guys are actually managing your index with the numbers to show on your screen. So ideally, I'm afraid we still have time for some pessimism which might come in, because we closely work with the ratio between the bank Nifty and Nifty, obviously, because 1/3 of a Nifty is banking stocks. Currently, we are at 2.65 roughly on the ratio, and we believe that this ratio has more on the upside. Some will show 2.7 as a resistance, and we believe that is where the outperformance or the push from the banking, which is going on in the last 3 months, might stop, and then we might actually see the Nifty getting into a corrective mode. So as of now, at least for today's strategy, we are positive on the bank Nifty more versus the Nifty, and we recommend buying a 32,100 call. Now the good part here is yesterday's close is around 80 to 85 rupees. We might get the levels of close to 40 to 60 odd rupees of the premium for a call option 32,100 on bank Nifty. That is exactly where we recommend buying that. The target would be somewhere goes to 108 to 110 on that. So roughly we are expecting the bank Nifty to find some resistance close to 32,280 to 300 at least on the futures.
Sameet, Chavan, what is your sense for the day today? Pre-post policy, whatever, Nifty or the Nifty Bank?
Morning, Rich. Clearly, the bias remains positive, and this is what we have been advocating since last couple of months. Any decline is likely to get bought into, and this is what we witness. Any intra-week dips is getting bought into. So now the base is clearly getting shifted higher. Earlier, it was around 11,600, 11,700, shifted towards 11,800, and now it appears that 11,950 to 11,883 would act as a very strong support. If you see last couple of days price action also, 11,950 has been acting as a very strong support, and yesterday we saw a strong surge toward the fag end of the day. So that clearly indicates that the overall undertone still remains bullish, and one should use dips to go long rather than going against the trend. So for the day, our strategy would be to going long on 12,050 call. for Nifty. Yesterday closed somewhere around 31, 32 bucks. So in case if you get a slight dip, if you get this particular strike at somewhere around 20, 22, the risk reward becomes quite favorable. You can keep your entire premium as your risk. And on the higher side, we would expect Nifty heading towards 12,100, 12,120. So the premium becomes 50 to 60 rupees. So one can take a punt by going long on 12,050 call in a range of 20 to 22 bucks.
Okay, let's talk individual stocks as well. Sameet, I'll keep it with you. What are your stock recommendations this morning?
See, Tata Motors is the one stock that we have been liking after a strong bump up in a couple of days around Diwali. Stock went into consolidation mode. 200-day moving average has been acting as a very strong support. Stock consolidated for nearly a couple of weeks around that important juncture. And yesterday we saw massive buying interest in this particular counter. So 165, 170 call were quite active yesterday. We expect the Tata Motor to head higher. 178, 180 would be our near-term target. This can be bought with a stop loss around 162.4. Apart from this, since last 3 weeks, we have been continuously recommending pharma stocks, and we are still quite upbeat from here on. 8 to 10% move in pharma indexes clear on card is what we are anticipating. So Lupin is the one stock that we are liking within this space. The overall structure remains quite sturdy. After a good rally, stock went into a consolidation mode, saw some kind of profit booking, and again those previous breakout points are acting as a support level. So within pharma space at current juncture, Lupin risk to reward wise looks quite encouraging. 820, 830 near-term targets can be bought with a stop around 776.
Okay, those are some of the stock ideas you need to keep an eye out on. What about you, Manoj? What are you recommending?
We like couple of stocks. Automobile industry, we like Balkrishna Industries. Yesterday, good delivery-based buying as well, and there is good long built-up. Obviously, the derivative buying helps in a follow-up buying because of the M2M associated with the stock future that we have. So we recommend buying it close to 920 with a stop loss of 904 and a target of 964. We like Tata Steel as well because obviously we have seen some buying or the rollover which happened from October to now.
I think we just lost that piece. But anyway, I'm not surprised that metal names also find favor, Devina. I mean, everything related to global trade did well, right? We were speaking about Tata Motors, Motherson Sumi yesterday. Like the metal index, when that flash came on the Bloomberg terminals and Bloomberg.com and BloombergQuint.com, almost everything related to that pocket went up in trade. Sorry, Manoj, we lost you, but you were explaining your rationale behind the ideas today.
Yeah, absolutely. I was talking about the metal sector, and if you remember, this entire move started from the rollover from October to November series, and it was lackluster in the entire month. Only during the last few days for this rollover, we have seen the cash-based buying coming in. So when there is delivery-based buying in any stock which is there in the stock future, this VWAP concept comes into play. Now, ideally, a VWAP concept is nothing but the weighted average at which your cash delivery happens. The stock futures does not really breach that level, and the M2M is positive from there on. So we like Tata Steel to buy. We would recommend buying it close to 408 with a stop loss of 398, and we believe that 422 might be the resistance, so that is the target in that. Equitas is one stock as well that we would recommend buying in today's trade. Let's say 102, you should buy that, stop loss of 98 and a target of close to 110 on that is what we expect to happen.
All right, those are some stock ideas coming in from Manoj. Keep an eye on them. But on to our special segment, Bloomberg Edge, where Yash tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we're looking at Reliance Nippon, and it is on track for a second consecutive week of losses, but the ADX indicator on the daily charts, that has thrown in a negative signal right now. The ADX indicator, as you know, is a directional indicator. It shows you basically the underlying strength within a trend and the directional movement of the security by using its highs and low price over a period of time. How do you interpret it? You go long when the plus DMI line crosses above the minus DMI line and vice versa. Now coming back to the price chart of Reliance Nippon, in the lower panel we have the ADX indicator, and as you could see, the minus DMI line, which is the one in red color, that has crossed above the plus DMI line, and most importantly the ADX line, which is the one in white color, that is currently quoting at a mark of around 30. Typically a reading anywhere about 25 indicates a stronger trend. So we have the negative crossover also take place, and the ADX indicator too is suggesting that there is strength in the trend. Now coming back to the price chart, what we've seen is that the stock has been on a one side tear after going from the levels of close to around 200 to as high as 375, but over the last 2 weeks we have seen substantial amount of weakness. There was that support at the mark of 350. It's managed to close just a shade below that mark at around 349. That is, if we see consistent weakness come in, 350 would be one point to watch out for. If it closes below that mark on a weekly basis as well, we shall see further weakness. But at the current level, do have a wait and watch approach, although the ADX indicator is indicating a negative signal.
This works well for the stock.
Yes, Neeraj, it has, because 7 out of the last 8 times that it has given a negative trigger, on an average over the next 1 month period, the stock has managed to close around 6.5 or 7% lower.
Okay, wow, that's a very high hit rate. Let's wait and watch what happens here. Parthiv, the AMC stocks would be in focus, right? HDFC, AMC, the OFS Open. The bids have come in at a lower price as well, but enough subscription for a very expensive stock. What happens here, both for HDFC, AMC and Arnam, which is also showing some very strong technical indicators?
See, I think certainly, Neeraj, what we have seen is that both these stocks got massively re-rated. First, it was HDFC AMC, post which we saw even RNM catching up. No doubt, I think they are great quality businesses, and they are going to be these businesses which will always get these higher multiples. And the reason to get these higher multiples is we know for the fact that they are continuously going to be free cash flow generating machines. And I think they don't need that cash to be redeployed into their business, and most of it goes out as dividend payouts. So in which case, I think I'm not really worried that there will be a massive derating. No doubt there are some growth challenges in terms of the entire industry facing a lot of headwinds in terms of especially the debt part of their business. And I think my sense is that going ahead, I think once things improve in terms of the dust settles, in terms of all the fear that one has in investing in the debt funds, I think certainly these companies will be able to garner higher AUMs. There have been also challenges in the very easy to get AUM through the liquid funds and the liquid plus categories, because overall the returns have lowered, and there are these banks who are paying like 7% in terms of the savings interest, which are luring a lot of customers from these liquid products to many of these bank accounts. So in which case I believe that there's going to be some challenge, but it's very easy to pencil in anywhere around 14 to 15% sort of an AUM growth over the longer horizon, because we are seeing a lot of move from the physical assets to the financial assets, and mutual funds and the ETFs that they bring along is going to play a very vital role. So at 25 basis points in terms of what they earn as profit after tax, giving it a 40 multiple, I still feel over the next 5 years, these can be like 15 to 16% compounders in the portfolio, plus an additional 2% dividend yield. So somewhere around 15 to 17% sort of return machine these people can be.
Okay. Watch out for some of these AMCs, RNAM there, which is at about 349. Counting down to pre-open, we're just about a minute left to go. We'll be keeping a close eye on what's been happening to the currency too. Yesterday's session saw a breather. We saw the rupee strengthen versus the dollar. 71.53 was its close. Let's see what happens in today's session ahead of the RBI policy, and also the Nifty Bank. That's going to be a crucial watch. The larger ones like ICICI Bank, that did really well. A big move yesterday that came into ICICI Bank. Whether or not there's a follow-through is something to watch for.
Yeah, brokerage notes were positive, but more importantly, Devina, it kind of, for a day or two, took over the mantle from Reliance as the most watched stock. Extremely important move yesterday. Let's see if there's more in store. And it's beaten Axis Bank hands down. Maybe because of the Sunti overhang on Axis. It's beaten Axis hands down for the last few days.
Yeah, and SBI too actually started to creep up a bit.
Yes.
So about 342 odd levels is where SBI is after seeing a move closer to 336 just I think a day or two ago. 23 seconds left to go. Let's quickly just pull up Asia to see if there's any material change out there. And we've got gains across the board, still holding on tight to the green on the screen for Japan, China and Hong Kong. SGX has bettered a bit since the last time we took a check. I think it's come off marginally, but still in the red there by 21 odd points for the SGX Nifty. There you have it. Pre-open ticks up on your screen. Nifty opens with a downward bias, but we'll wait till that settles in. Sensex is down up about 0.5%. Coming to the big gainers of the day, you've got HCL Tech, which has got an unnatural move. Actually, this is the bonus issue. So HCL Tech 619. That bonus issue of 1:1 that kicks in today's session. So that's 619 for HCL Tech with the bonus issue. Z is up about 3.9%. Bharti Infratel, that's up about 3.8%. Nestle has moved up. You've got Yes Bank, Tata Steel, UPL, all of them gaining in trade today. L&T, after seeing a slight bit of a sluggish trend over the last few days, seems to be picking up a bit, but still sub 1300. So not the best large cap to have invested in over this period of the rally that we've seen. TCS up 1/3% and SBI at 343. Amongst the gainers then, among the losers then, Bharti Airtel on this fundraising news is down about 6% so 435, which probably could, leave you with a bigger headroom if it indeed were to hit those target prices of 525, 530 according to brokerages. So maybe the risk reward turns a bit more favorable once it's cooled off a bit. HDFC, Reliance, BPCL, ONGC, Grasim are some of your bigger losers in trade. 71.52 on the rupee versus the dollar.
Okay, just 2 or 3 individual names. Want to mark what HDFC AMC could be up to. That is a key monitorable, so do watch out for that one. Should come up on your screen. Well, this is around the price at which the large bids have come in, but these are pre-open rates. Keep that at the back of your mind. And even if this were to correct to somewhere around these levels, there is no saying that it will not bounce back. Along with Bharti Airtel, Vodafone Idea too sees a downtick in the session on pre-open, so down about 5%. So the telcos have taken a bit of a beating in the session today. And watch out for, well, I don't know if TVS Motor will have such a field day, but it looks like starting off well. So there are a couple of names that you need to monitor in the session. Well, let's first, we'll talk about all of these rates at the end of the pre-open session. For now, let's talk about the top brokerage calls, and Darshan Johnson with one of those in the session today. Darshan.
Yeah, so Neeraj, again, there seems to be a lot of consensus in terms of L&T and probably how it will miss its order inflow guidance. We also had written about it. Now, Bank of America Mellon says the same thing. They've cut the target price to 15.05 from the earlier 15.95, but they maintain a buy given the fact that they believe valuations are attractive. Couple of things that they point out is they believe that over the next 4 quarters, order inflow will be extremely weak. They've cut the order inflow guidance also because of the fact that over the past few months, at least in the 3rd quarter, order inflow has been rather subdued. The other part that they speak about is Maharashtra and Andhra Pradesh, by which they've cut the order backlog by anywhere between almost 38,000 crores. Now, Maharashtra has a change of regime and a lot of projects are put on hold. The big Mumbai coastal road project is on hold, so that is developed by L&T. Andhra Pradesh, you've seen a lot of projects getting cancelled, so the execution risk still remains for L&T, and part of it they are saying that projects under the review, at least in Maharashtra, possess a lot of execution risks, and that is why they've cut the target price, but they maintain a buy given the fact that they believe valuations are attractive.
All right, Darshan, thanks very much for that. So 1294 on L&T there. I remember we've been talking about a whole lot about how the order book is missing out on those bigger orders this time around. A quick look at Z. That's at I think 287 now. Manoj, you tracking Z? What should one do if one has a position here?
Now, ideally, in this segment, if you really see month on month, rather than Z, I would still go with PVR. That is one stock where the net cumulative around 32-33% of your long rolls have happened, and that is even rolled into the December series. Again, telecom and media, these are 2 sectors. The only point is the moment or the time when the Nifty decides to top up. And if you're caught on the wrong side, the M2M for the next 1 month can be good 20 to 30%. So we still refrain from buying those, at least on the derivative side. Either buying in the cash market, you can still wait for that. I guess, let's say, because the momentum is going on, we still, if I need to pick a stock fresh, at least I'll still go with the Kotak Bank. A good 38-40 points of trading can still be done, and we try to buy it close to, let's say, a 16.46 to 48. Stop loss of around 16.22 on that, and a target of close to 16.84 is what we are seeing in the stock in the short term at least.
Mm.
Okay, the other one, Sameet, that I wanted your trading view on is on Bharti Airtel. I think the big news, a lot of people would be in this trade. Maybe some long positions created yesterday as well. It's now coming back into the green. So those rates seem to be deceptive. I wonder if Vodafone has done that too. But let's assume that Bharti starts in or around these levels. Is it a good trade?
See, one has to understand that low-hanging fruit is already gone in case of Bharti Airtel. The kind of massive bump up we saw from the levels of 350 odd levels towards 440. So in a span of 3-4 days, stock went up nearly 20-25%. So with a momentum view, yes, this stock can continue its northward trajectory, wherein stock can head towards 485, 490 levels also. But with a trading view, it becomes very difficult considering its overall strong run up in the recent past and the risk reward ratio. But those who have bought it at low level, or those who had bought it in a consolidation last week somewhere around 430, 440, they should certainly stay put and they should now trail their stop losses higher. So now 440, 445 would act as a very strong support. One should keep their stop losses around those levels and ride this tide probably towards 485, 490.
Okay. Manoj, before we let you go, what's going to be our top trading idea for the day?
I guess both the indices as I was saying, Bank Nifty again try to buy the call option that 80-84 close. You might get it close to 40 to 45 rupees. That's an excellent buy for today's trade. Obviously, till the policy, I do not expect a big move in that, but the levels for the Bank Nifty can be closer to a 32,300 or so. A 32,100 option can give you a good target of 108 to 106. The levels to buy would be 40 to 50 rupees on the call option premium.
Okay, Manoj, we'll leave it at that. Thanks much for taking the time out and being with us. Appreciate your time. Parthiv, fundamentally, a pack of stocks which has been doing very well are amongst these fashion retailers, and particularly Trend, which has outperformed everything by a margin. But this whole pack has been very chalk and cheese. Trend does well, some of the others don't. Aditya Birla Fashion, Ho Hum too. Within these fashion retailers, what's your thesis here? Do you like anything here?
See, Neeraj, I think no doubt the entire pocket of this retail space, whether I can include the fashion players or whether I could include, the retail pure players like, say, Avenue Supermart, I think there's a huge polarization in terms of the valuation. There are these players which are into garments and maybe related to fashion-related business, like Aditya Birla Fashion, like Trend. I think they are quoting at valuations of somewhere around 45, 50 times forward. No doubt great quality businesses scaling up reasonably well. And then there are these pure retail places like DMart. And I think we know also for the fact that Reliance Retail it's also quoting at humongous valuations of 90, 100 PE multiples. So now I think the challenge is that, it's an expensive pocket. We'll have to pencil in decent growth numbers for the next 5 years. But I think if I have to pick one stock, then what I feel is that a company like Aditya Retail Fashion, I think is extremely well placed. I think they have great brand positioning in different segments. And it's a classic comparative example with that of Arvind Fashion, which I think was a very much hyped stock and I think didn't deliver since last many quarters, and we have seen a massive derating taking place, and now the management taking action control in terms of trying to stem up the loss and trying to improve the return on capital employed. But it's going to take some time. But here is Aditya Birla Fashion, which is far better placed. I think they have perfect brand positioning for different categories. They're scaling up quite well. And I think whenever the consumption cycle improves big time, I think they could be key beneficiaries. So valuations are not extremely stretched like that of Trend. So I feel that this is a company that one can invest into for the next 2 to 3 years at least.
Okay, so do watch out for these names as well in the session. As the pre-open rates settle down, Devin was talking about Z, that is likely emerging as the top gainer, but Reliance Industries 2 at 1574 is likely to be active in the session today. So watch out for banking stocks, watch out for Reliance Industries, watch out for SBI and ICICI Bank. Actually, very quickly, Sameet, it's a slightly difficult question between the two, which is SBI and ICICI Bank. Which looks better positioned for a short-term trade?
No, I think clearly ICICI looks good, although it has run up quite a lot. From here on, the momentum looks, quite strong. So 540, 542 for a day or two, you can keep your target for ICICI Bank. And on the low side, 524, 25 would act as a support.
All right. Stay on with us, gentlemen. Lots more to talk to you about, but we're just minutes away from market opening, and we'll tell you all that you need to know to stay ahead in trade today. India's monetary policy is set to cut rates by another 25 basis points as per a poll of economists by Bloomberg.
Bharti Airtel will raise $3 billion or 21,500 crore rupees in order to repay the AGR dues. The fundraise will be a combination of equity and debt.
Reliance Jio has unveiled a new prepaid plan, tariffs of which are higher by up to 34%.
State Bank of India's board approved sale of 8.25% stake in UTI AMC through an IPO.
Ujjivan Small Finance Bank's IPO is subscribed 166 times, becoming the most successful primary offering of the year.
And lastly, InterGlobe Aviation expects capacity growth of 22 to 23% for FY20 against an earlier guidance of 25%.
All right, just 4 minutes left to go then for market opening. And Parthiv, I want to come to you on L&T. We were just talking about it. Brokerages are still optimistic, but it looks like it's missed out this entire run-up that we've seen on the index. And being a large cap name, and someone would have probably thought of this as a bellwether stock and invested money, has really not reaped any benefits.
My concern with L&T, Devina, has been that since a very long time, they're eagerly awaiting the private capex cycle reviving, which has certainly not happened and which does not look on the cards for at least next 6 to 12 months. And I think another big problem that L&T is facing is also coming from the state fiscal problems. I think the states tend to contribute almost 40 to 45% of the order book for Larsen & Toubro. And we're seeing a lot of states struggling with their own fiscal issues, which are like not becoming very aggressive in terms of the infra projects. And the only respite comes from the center, where I think they are still very aggressive and talking huge amounts of targets for infra push. But again, we know for the fact that their fiscal is also getting a little tight. So I think it's going to be challenging times for not only L&T, but most of the infra companies. And with issues like what happened in Maharashtra, still I think very early days. And I'm hoping for the fact that, a lot of infrastructure projects are ongoing and they are not disturbed. But I think that certainly disturbs the sentiment. But the saving grace for L&T is, if I look at the sum of part valuation with all its subsidiaries, I think at current levels of 1250, it's exporting extremely cheap. L&T as a company historically has always quoted at 21 times. Currently is quoting at around 15 times. So I think all this negative news is factored into. And I firmly believe that it might take 6 months, 12 months, but India's infrastructure story has a long way to go. And whenever things improve, I think L&T will be the only beneficiary in the listed space with the scale and size that it can execute in terms of the projects that it can take and execute.
Sameet, quickly, these Max Group stocks, Max Venture, Max India, Max Financial, doesn't seem to have any pullback of sorts. I mean, Max Financial, though, today is down closer to 1%, but Max Ventures, Max India, again, having those gains of about 2 to 3%.
I think within this space, the only stock that we track is Max Financial. After a strong rally yesterday, we saw a first sign of profit booking. So for a time being, this stock might consolidate with some kind of profit booking. So on the low side, 500 to 490 would act as a very strong support. Low side, 530, 540 would be seen as immediate levels to watch out for.
Parthiv, quick 30 seconds. Ujjivan and the IPO response that it got, what happens to the parent now?
See, I think it's really interesting to see that they've got demand for almost 70,000 crore. And who says there is not demand for good issues? No doubt, I think at the approximate valuation that Ujjivan Small Finance Bank will quote at post-listing, I think it's going to be a huge premium. So we are not very bullish at the parent company at this juncture, because it's always going to get that holdco discount. And it has already rallied from levels of 280 to levels of 350, 360, where valuations are also getting stretched, and I would really not be willing to pay almost 5 times price to book multiple even for its subsidiary, which is the Small Finance Bank. So it's very, very expensive, but we'll see what happens post listing. But I think it's a decent opportunity for one to exit this position.
Yeah, but listings are on fire nowadays, so we'll have to wait and watch just to see what happens when this one lists. But a quick top trading idea from you, Sameet.
I'll go with Lupin, considering the risk reward ratio. 776 would be the stop loss, and 820, 830. These are the next levels to watch out for.
Okay, Parthiv as well as Sameet. Gentlemen, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. We are about 15 seconds away from the market's kick-starting trade ahead of the monetary policy committee decision. We might start off well, even for the banks. The question is, will we have a rara move ahead of the policy, or even if that is to come, it will happen post-policy. Let's wait and watch. For now, the start. And in the green, about 0.25% for the Nifty 50, 30-odd points. The Sensex about 100 points, 1/3%, nearly 1/3%. Let me rephrase myself. The Nifty Bank about 100 points, again, nearly 1/3%. So not a bad start. Almost in line with what the pre-open rates were suggesting. But once again, what we said in the morning that the SGX Nifty may not necessarily be the lead indicator of how we will start. And it's failed to be yet again. And the Bank Nifty now slowly gaining some more momentum, nearly 125-odd points. The mid-cap and the small-cap indices should come up on your screen as well. About 1/4% or thereabouts for both these indices. Quickly, the heat map. And let's see, I think there should be a tilt of green today. Yes, actually almost even Stevens for the gainers and the losers. Bharti Airtel incidentally starts off a couple of percentage points, so nearly 1.5% to 2% lower in trade. Sun Pharma about 1% lower, BPCL, HDFC about 1% lower, IndusInd Bank and Tech Mahindra too slightly lower in trade. So maybe a lot of positions built on Bharti ahead of the event and maybe some cool off. Bharti Infratel incidentally starts off about a couple of percentage points higher. Z. Yesterday, remember, both Dish and Z shot up in late trade yesterday. Z perking up again today. And Reliance Industries, the big boy, which has gotten a slew of upgrades today. 4 brokerage notes. All of them have upped the target prices. And that stock is up about 1.5%. And ICICI Bank, clearly the star of this week thus far, up another % in the session today, trading at fresh life highs for itself. Very quickly, just a couple of pockets that I want to highlight before I hand it over to Devina for what's happening across the broad end of the spectrum. HDFC, AMC and RNAM should be stocks in focus, and HDFC AMC 3.5% lower. RNAM incidentally starts off okay, but HDFC AMC, because of that OFS, starting off lower yet again. 2 days on a trot now. The OFS impact on the stock has corrected quite a bit already. Stocks which are active in trade yesterday, very quickly, the likes of Dish, Vodafone, Tata Motors, DVR, and Dish and Tamo DVR are doing okay. Vodafone Idea, another 5% lower in trade. Devina, what are you spotting?
Well, starting off first with the CCL products, which has moved up about 5% in the session. Has flatlined over the last few months. In fact, last 3 months was down, but today see some resurgence. Gayatri Projects last 7 days has been up 22%. Added on by gains of about 3.2% in today's session. Ramco Systems is at 150 now. You've got the likes of an ITDC at 361. Last 7 days about 4.5% to 5% higher. 17% higher in the last 7 days for Tata Coffee, and that continues to add more. 2.5% higher. Corporation Bank 2% higher. Bajaj Electricals 2% higher. Navkar Corp. Then you've got Canfin Homes is the other one. Should look at the other housing finance companies too, like an LIC Housing Finance, which up until now has done really well. Canfin Homes is 1.5% higher. LIC Housing Finance again closer to 1% higher in trade after seeing some profit taking yesterday. Blue Dart Express is up 2%. Then you've got the likes of a Magma FinCorp, and we just spoke to the management 2 days ago. That stock again is up about 1.7%, so looking good for the counter. What's not doing well, Vodafone Idea is down 5%. A Generation, smaller name, but down 4%. InterGlobe Aviation on the back of cutting their capacity guidance, that's down 1.5%. Texmaco, Arvind, Hexaware are some of the other names that are looking weak this morning.
Okay, let's get in a very special voice. Andrew Holland, CEO at Avendus Capital Alternate Strategies, joins us right now on the show. Andrew, good having you for the first time in our studios. Yes. Welcome. What does it look like, Andrew? 2 days ago, it seemed like the world was in a bit of a risk-off mode, but suddenly yesterday, the Bloomberg was flashing that we might reach a trade deal, and the color has changed a bit. It's very volatile.
So I don't think we're going to get a trade deal. I think we're going to get a tariff deal.
Okay.
And that's, I think before the 15th of December is when the next set of tariffs would kick in. So I think it's going to be a tariff deal. A trade deal could not happen, partly because it wouldn't get through Congress. And that's why I think, Trump a few days ago said, a trade deal will happen after the elections. And that's exactly what's going to happen. So I don't think, so what you want is a tariff deal and then a roadmap for the trade deal. And I'm sure that, Trump is going to say, I'm the only one who can get a trade deal with China ahead of the elections. And so that's going to play into his court. So as long as we have a kind of a roadmap and there's positivity around doing a trade deal, then I think markets will like that. Because what you're going to have is no tariffs, or hopefully no tariffs. Global growth will then start to, expectations will pick up. And you're going to have interest rates lower for longer. And that's a great Goldilocks scenario for equities going forward.
Which are already at record highs. Right.
Yes, so I think the market's expecting that kind of Santa Claus extra rally on the back of this trade tariff deal.
Do you think that this move that we've already had, we have record highs, is sustainable? Do you think we'll stay here and move forward from here? That's the.
I think our markets will, along with kind of, so if we have the tariff deal, what will happen is that everyone will say global growth will pick up. That's good for emerging market. Emerging market flows will come. And India's weightage will mean that we'll get flows as well. So that will help push our markets. And then in the run-up to the budget, I think we're going to have lots of expectations in terms of how the government can get the demand side going, therefore tax cuts. So I think the markets, or the Nifty, will probably, between now and then, we'll get to that 12,500 level.
Just to that point that you mentioned about India's weightage, I think in the MSCI World Index, it's closer to about 9%.
Yes, exactly.
The last time we checked, there was not a material dip in terms of the foreign holding with regards to that weightage. They were somewhere around 8.5. So they were pretty much at par to what the weightage stands at. So do you see them going overboard and giving a premium to India then? Because they're already at weightage.
No, I don't think we're going to get a premium. I think, so as flows come into emerging markets, obviously there's other emerging markets out there which are more export kind of led in terms of their growth, and their PEs are a lot cheaper than India. So we will just get flows. I don't think we're going to get a disproportionate amount of flow. We'll just get our weightage.
Okay, you're painting almost a very simple picture about how the entire piece will move one by one into leading up to the budget. The one question that could come in, and there's a chart that is now floating around on the Bloomberg Global Network about the Sensex P, and I know we don't look backward, we should look forward, but just a small look backward suggests that we are at astronomical valuations for the Sensex. The question is, do you think growth will come back in such a way that it will make these valuations look a lot more reasonable?
No, so what's good, what you're talking about the 10 stocks, I look at Nifty more than Sensex, but basically the PE of the Nifty is what, 18, 19. The broader market below those is cheap, it's 10, 11 times. But what's going to get investors buying into that? It's really when the domestic economy starts to pick up fully, right? And we're at least 2 quarters away from that. So I think everyone's going to stick to quality. And I was meeting some of the leading companies over the last few days at the conference. They're still doing well.
Okay.
It's not that they're not doing well. So everyone says, okay, economy's bottoming out, but we're not quite sure. So we'll stick to the leaders in the sector because they're continuing to take market share. And once the economy, you can see signs of it picking up, then we'll start to look at kind of mid-cap and small-cap.
So the last 1.5 months, Andrew, we've seen some bit of a pickup in the non-leading names as well, those top 10 names. Do you think that is just a bit of a reversion to mean, but the larger money will still flow to the ones which have been performing for the calendar year thus far?
Yeah, I think so. So let's again talk about the flows into India. If we get that weightage from emerging market flows, then it's going to go into your top companies, right? Your top market cap companies. So it's still going to be drag up the top 10 stocks. But I don't think there's going to be high conviction on mid and small cap yet until the economy starts to grow, because they're all operationally geared to a domestic driven economy.
This is actually pretty similar to what you're saying is in 2018, the money that came in, a bulk of it that went to the mid caps and small caps from the FII side. That is completely reversed now. And any incremental money that's coming in is just moving into the larger names, with the mid caps and small caps being left out. But my point being is, when we're talking about these quality names and these mid caps and large caps, the last 10-year CAGR growth rate for them has been somewhere closer to 10% or maybe even sub for some of these names. So then attracting valuations of 60 times and still going, is that justified?
So let's take Unilever, for example, right? So I met with them the other day. Now, obviously, they've got the GSK merger to come through, and that will be the first quarter. Now they're ready. They're ready to, get all the synergies that will start to come up front for them, and then they've got the pharmacy kind of trade they can go into in terms of their products. So this is a great uplift for their top line, and that falls straight down to the bottom line. So you're going to get growth from Unilever over the next 5-10 years, which where habits dipped over in some years, but we're not going away from the consumption story. So Unilever will actually do very well. So despite the 60 PE, would I buy it? Of course.
Which is, actually something that I read somewhere was in the US with the Amazon and Google's and their growth rates and the kind of multiples that they attract versus the kind of multiples that we attract. I mean, there's a stark difference because the growth rate is higher there, but the multiples that they get are lower than the multiples that we get, with our growth rate being lower than theirs.
Yeah. If you take Nestle and Unilever and you go back to the European experience, similar size of kind of population, it's compared to the middle class of India. in those kind of 80s, 90s, and you look at the share price of Nestle and Unilever, you'll just see consistently it keeps going up. The P's remain high because that was the consumption story of Europe. This is the same here. It's not going to change here. So I think we'll continue to pay those kind of multiples and be happy in the fact that, you know, you're getting strong growth. You know, you're looking at 10% volume growth in a difficult market. Now, if consumption picks up, then you'll get better growth than that, plus the kind of merger benefits that they'll get as well.
And the return ratios that these companies enjoy any which ways. Yeah, Andrew, okay, one perspective from you, because you guys now run arguably the largest AIF dedicated in India. And how do you think that business is doing? The reason I'm asking this to you is a lot of people are betting on the capital market linked businesses, and aside of the two AMCs listed, there is now also a wealth management firm listed. You guys might be coming out with an IPO very soon, maybe, and hopefully that will work. But you know, a lot of the brokerages as well. So I just want to understand, how do you think the next 5 to 10 years are poised for growth for capital market linked businesses? Which are the ones that you think will give the biggest bang for the buck?
So I think you've got to look across, you know, the different parts of that, because it's a, you know, a $5 trillion economy. If we ever get there, will be, you know, the financial services will play a big part of that. Now, do you want to be in the insurance side? Do you want to be in asset management side? So on the asset management side, obviously you only have a couple of players there. So there's a scarcity value as well. So I'm sure we'll see more and more players come through. But the P's are fairly rich, shall we say. But, you know, that's working on the basis that over a long period of time, it's a bit like kind of what I talked about Unilever. You know, you will see more and more people being attracted to financial products. So the growth is not going to go away. You might have dips here and there, you know, as markets, you know, will be volatile in periods. So, would I be chasing? A little bit probably, because of the scarcity value, but not kind of chasing too hard at the moment.
Do you, are you going big, or rather are you optimistic on how the housing segment plays out in India? I mean, so far it's been a bit of a lull. Commercial real estate is doing much better. But do you feel that housing could come back on track now that you've got this special window for stored projects? But that also brings in the other key question of whether the market gets flooded with a lot of inventory.
So there's two schools of thought. One school of thought from yesterday's conference was, you know, builders should take a 25% haircut. I mean, if I was in the UK, what companies would do, they'd take a 25% kind of reduction in their land bank, and then, you know, obviously their balance sheet would take the hit, and then they'd be able to sell inventory because they're bringing down prices, right? And you get cash flow and you move forward. It's a 1 year kind of pain. Now, is the Indian real estate market ready for the 25? Is the banking sector ready for the 25? I don't think so. So I think what I like was Deepak Parikh's kind of view, which is that, you know, we want to lend to some of these companies and borrow for that last mile or last kind of, you know, kind of getting the cash flow there, but don't treat it as an NPA. I think if we could hear from the RBI today something to help banks kind of get this cash flow into the builders to move it forward. But you're still left with that same problem of high-priced apartments which people can't afford. So I think it's not going to help. It will help the cash flows and it'll get things, but it won't really kind of change the situation until everyone takes a more realistic view of where prices should be.
Okay. Anything else, Andrew, that you are excuse me, that you feel is a good theme to follow?
I think, you know, the theme in the very short term is going to continue to be large caps, and I don't think you should be looking too further down at the moment until the economy starts to pick up. I think the government's listening and doing some of the right things, so I'm very happy in that respect. And now the global factors are all kind of tailwinds. I think the risks, you know, for global and for India are these. One is Hong Kong's still causing problems, and you know, I dread to think if the Chinese troops ever go in there and do anything, that would send some very bad signals. It looks as though the Conservatives are going to win in the UK at the moment, so that's kind of good for Brexit if that kind of comes through. So that would give a little bit more stability there. I think in the elections for next year with Trump, I think that's a risk in terms of, at the moment it's 50-50, Trump winning not, and we'll have to see how the candidates come through. But there could be, some scares around if he starts to lose any traction, that the next person coming in will have high taxes, and that won't be liked by the market. So that's one risk to watch out for.
Well, all palpable risk, all what we can feel right now, but let's wait and watch. For the near term, you seem to be more bullish, and which is, well, maybe good news from a bull's perspective. The markets are doing well today as well. Andrew Holland, take a moment to thank you for joining in today. Really appreciate your time.
Thank you.
All right, and Andrew made a very important point about whether the RBI dishes out some goodies for specific pockets or no. We need to take a break. Coming up on the other side of the break, the MPC may be sure to cut rates today, but how much monetary support does the economy and the credit market need? We speak to fixed income expert Manish Vadhavan. And Maruti Suzuki's announced a price hike, even amidst the demand slowdown in the automobile industry. We talk to Executive Director Shashank Srivastava to understand this strategy.